Roger Montgomery from Montgomery Investment Management, and I'm with Sean Sequeira again, this time to talk about change. What do catalysts mean for the investment choices that Sean, Alan and his team make for the Montgomery Fund? Sean, thanks for joining me again. In the previous video, we talked about the need to identify high quality. We talked about valuation, but then perhaps distinctively, you mentioned change. I call them catalysts. You're looking for something that is going to mean the gap between price and value closes, and that helps reduce the risk or perhaps the time it takes for investors to generate a return. Talk a little bit about what you're looking for when it comes to change or catalysts.
Thanks, Roger. What we're looking for when we talk about change, or when we say catalysts and triggers, those things that drive change within a company, those things that will drive quality improvements or earnings growth profile improvements. That may be things within a company's control, such as purchasing a new company that expands their market, entering a new market in terms of product, changes in management, changes in balance sheet structure, or the structure of the company in total. What we want to find is a company where the change may improve the quality or the earnings growth profile.
So when you do identify that change, presumably the rest of the market doesn't value it the way you do or doesn't see what you're seeing. Can you provide an example of a change that you identified and were successfully invested in?
An easy example to explain is Altium. Altium was a good quality company. They had a very good market share within their available market size, something like 35%. And usually when they're at about that level, there's not that much further upside you can gain within a competitive market. What we saw was a good quality company that bought a new company that vastly expanded their available market size.
Wasn't it?
It was Octopart. They bought Octopart and a number of other smaller acquisitions. Their available market size went from 500-600 million to 9 billion. That allowed their earnings growth profile to change. It accelerated their revenue growth. The market took a little while to pick up on the implications of these purchases. We were able to identify this, utilize the fact that they had been a very good quality company over a very long period of time, and extrapolate that into the future to say that this company could actually grow a little bit better than what they had done in the past. And indeed, they actually doubled their earnings growth profile.
The market was very focused on 10% earnings growth, but it was significantly more than that.
Yeah, it ended up being 20% for a number of years. And indeed, if you look at the company now, they're still forecasting 20% for the next 3 to 5 years to hit their $500 million revenue targets.
Thanks very much, Sean. Well, there you have it, how Sean, Alan and his team identify catalysts or change to refine the investment universe and pick the most successful opportunities.